Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Friday. It is the end of the week. It is May 3rd. Bulls ended the week strong for yet another week ends, and another bullish week comes to a close. Most notably, the rut breaking 16 and cleanly breaking 1600 here today. That was probably the big one, but really stocks started early and they just kept going as I guess that pullback on Wednesday into a doji on Thursday was enough for lots of buying here today. So hi, Patricia. Hi, Linda. Hope you guys are doing well. Good to see you. Hope you had a great day in and out of the market. Just quickly looking ahead to next week on the earnings front. Still plenty, but a lot less than we had this week. We only have 3 pages of going 3 pages deep on S&P 500 companies reporting here next week. I think we were over 150 stocks last week. So still a lot to come, but relatively speaking, we're a little bit out of the woodwork. So one more really heavy week, and then I think we can say earnings season is behind us. And hey, Micah, good to see you. So big names, Disney, that's going to be the big one next week. But you've got Becton Dickinson, you've got Emerson, Cisco, EA, Activision Blizzard came in a little disappointing today. We'll see if EA can outdo them. As a video game player, I usually just kind of wait to see which one's worse. So we do have a handful of names reporting of interest. Most notably, though, I think will be Disney next week. And hey, Whitney, good to see you, buddy. Hope you're doing well. This is the kind of day it was in the market. You look at the heat map, and it is just green. You know, you had CI, you know, then one of those healthcare plans dipped down a little bit, but the red was, you know, Activision Blizzard. One of this, I can't remember what the other one was, but somebody had a pretty rough report. Oh, CTSH, that's who they were, down 11%. So there were a few companies that weren't able to get in on the action today, but by and large, I mean, it was just buy early, buy often. And as you look at the S&P, I mean, it really kind of shows. I mean, we just chipped our way up all day long, closing near the high, right at that old resistance zone, looking like a lot like a pullback. So as we're going into next week, I think probably overall the right way to be looking at it is the same way we've been looking at things for a while now. Bullish. I wish it maybe would have done half this today, but that's okay. You know, you don't get, you can ask, you just can't expect it, right? So over on the S&P, you know, really not a whole lot to see. You know, you can argue that we're still with these tops. I think a clean break of these highs that we set up early this week will be viewed as a pretty solid bullish signal. Within the context of the pullback, I believe there's no reason to expect that we're not there in the very near future. So still excited about this pullback opportunity myself. We have a little more room to go in the Dow, as you guys know. Got to move this because I can see it. I know you guys can't, but it's in my way. So over on the Dow, we have a little more room to run. And so that's what's kind of neat about where the market is right now, knocking on a door on the S&P. Some real room to run in my mind over on the rut, and still some pretty good room to run over here on the Dow Jones as well. So not a whole lot until we work up into, of course, those highs. We definitely got to keep an eye on those, right? That could be a potential triple top or whatever you want to call it, but we've got some room between here and there. There's no doubt. NASDAQ, of course, if the market's having a good day, pretty safe to say the NASDAQ's having a good day, basically knocking on the door of resistance. You know, that resistance really that we put in early this week and last week, you know, we really kind of have a clear little top here. So a little bit of early next week should be a good little signal as well. Of course, we're dealing with highs here on the NASDAQ. So that, I think that's maybe in a very interesting spot to give us a little bit of a push, if you will. Anytime something's breaking resistance, it's going to put a little bit of bullish pressure into the market. So that one's interesting, knocking right on the door of a breakout off of a little bit of a 1 week ceiling that we built together. But the interesting one, and probably the most exciting one, in my mind at least, is the rut. You know, whether we called it 16, whether we called it 1605, I saw it. I think it was Maria in the trading or in the halftime report today was looking at 1610. We all kind of were in that area. We maybe didn't agree to the exact point that to the point, but we were all in the same ballpark. I think realistically speaking, wherever you were, 1605, 1610, I think we broke it. And this long time, really, especially these last several weeks, really went sideways here. Let's see some follow through. I would expect to see follow through on a chart that looks like this, to be quite honest with you. As we all know, the rut can play catch up really quick. It can move fast, just like it can do nothing for a while, right? And if this breakout does want to run, I'm not going to be surprised. We don't really have a lot of resistance in my mind until we get into 1700. We have little things. We got a little bit at 1635, a little bit of a pivot point. We've got a little bit at 1650, 1655, a previous swing low. But any significant levels of resistance, we've got no moving averages on the daily chart, don't really have a whole lot. Let's sneak into the weekly chart, see if we might be missing anything. Not really in my mind. I guess you could say the very peak point here, but I think we closed that here today. And with any upward movement, I think we will have beaten that level as well. So, I mean, just not a lot of overhead. We'll have to take this one, swing by swing, but in any of these little areas could present more of an issue than maybe we would expect, or we will expect when we get there. But I think this is a pretty bullish signal, quite honestly, over on the Russell. So, interesting times that we find ourselves going into early next week. We've got room to run on a nice bullish candle on the Dow. We're knocking on the door on the S&P. We've got a little bit of a 1 week breakout in our, what's been our strongest index in the NASDAQ. Big clean break on the rut. So all signs to me are pointing to be looking bullish as we're working into next week from a broad perspective. And hey, Lloyd, good morning, sir. Really nice bounce back day in the materials. Now, for the most part, everything got a boost today. You guys know the drill. You look at that heat map, when everything's green, everything got lifted, right? Whether it deserved to or not, that's usually how it works. We talked a lot about, kind of individual components within this sector after yesterday's Doji and Dow DuPont miss on earnings. Still really liking this area. Probably a little more of a rocky if we're going to play into a pullback within this sector next week. I think we should just kind of expect a little bit more rockiness than maybe we would in, say, the consumer staples or the discretionary or the technology that really have, maybe not textbook speaking, but much cleaner pullbacks. We do have to worry that we're below some of these short-term averages. I'm not overly concerned, but you guys know me. I always feel better when they're, working with me and not working against me. So, whether it's the 9, the 20, this previous swing from the other day, all of these things can act as some resistance catalysts. While I would expect, and we looked at this weekly chart before, and I think this weekly chart really is a good looking chart, it may not be, I guess what probably mentally I'm preparing for it not to be the type of 1, 2, 3, 4 days up into my target. I'll be rooting for that if I'm doing anything in this space, of course, but I would expect it to maybe be a little choppier than some of the other sectors. But I really do like this pullback over in materials. I think risk to reward's really nice within this space. Even though it might be a little more of a battle than some of the other sectors that don't have as much to deal with in the form of short-term moving averages and swing lows. Of course, you get to the other side on a day like today, we saw that that break, and we saw that confirmation yesterday over in energy. You see that type of a day in the market, and you figure energy probably did okay too. And I don't know, I wouldn't say that it did all that great. That's a pretty ugly candle, working way up, working way back down. Just another day to make me even less bullish and more bearish within this space. I would like to see it kind of work in. Some of these things do with kind of where they're at. We saw how beat up some of them were yesterday. I think a little bit of a retracement would make it for easier trading for new trades at least, but maybe a little consolidation can work too. I don't have high hopes for this sector as of right now. I can't imagine going into next week how anybody's looking at the energy sector and that's the one they're excited about. And it takes all kinds, right? I don't speak for everybody, but there's so many sectors that are set up in much better ways in my mind. So I have a hard time thinking who's going to buy this. We'll have to see. I'm going to be watching 65. The bare minimum, I think we've got to get back above 65 to start talking about putting ourselves back into this old neutrality range. I don't have high hopes, at least short term, that that's going to happen. We'll still be an area, not a lot of setups early next week. As I was scanning, I wanted to find some bearish energy setups, but for the most part, it looks like we're going to need a little bit of a retracement or a consolidation period to find new, at least good new trade setups that aren't kind of continuation of already break to the downside. Really support for me down here at $62. Honestly, I expect somewhere in the not too distant future us to be talking about $62. Is that going to hold or not? And the longer we're below 65, the more I'm going to think that. So certainly the most bearish sector, in my opinion, eclipsing healthcare, as we will see. I think we have to take, be a little nicer to healthcare going into next week. But we'll get there in a moment. Over in the financials, nice bounce back. This continues to be a very strong sector. As you guys all know, this was a nice break. We held up nice. We sold off Wednesday with everything. Really started moving here today. As we're looking at where this thing can go, there's room in a lot of these areas. We've talked about it before, but really quick, just sneak in, do a couple of peaks of where things might be able to work to. I mean, you have JP Morgan. I mean, this is a big name. I mean, this is a potentially, we're gonna have to go to a weekly chart here, but I mean, this is a big time breakout, right? Top drop, top drop, top drop, top. We're knocking on the door of a weekly chart. I mean, this is a significant resistance level. This is, over a year in the making right now. It might not be something super comfortable to trade necessarily, but a break of that, I think, is a very bullish signal regardless. Of course, we've got Bank of America that broke out late last week and pulled back this week. A little bit of room to run. It's Bank of America, so it's doesn't have a ton of room. Citigroup, we've taken out. Well, there we go. We basically don't have any significant resistance until we work into these highs at $74 in my mind, at least, especially if we can kind of cleanly take out this little stretch back here in this, kind of the 71 ballpark that we're in. So many of these things in my mind still have room to run. Of course, Goldman Sachs, probably one of the more interesting ones, has been battling the 200-day moving average for weeks now, and finally was able to close above it. So we have a pretty strong sector, finally closing above that 200-day moving average. Would like to see some follow through, of course, but to me at least, financials still look like they've got a lot of, at least some room to run. And you look at the ETF, and I think it kind of reflects that as well. Whether we want to call it it's a little more complex because there's not a nice clean level, which is always preferable, right? We have a little bit at 2840 up in here. Certainly 29 we'll want to keep an eye on, but I do really like where we are from a bullish point of view in the financials. Same really with the industrials. Really nice day here today, and it's shown well. We saw that that big gap on earnings day, right? And on Boeing earning day, and really held up nicely. Just continued to drift to the upside. We're now kind of reaching this high up here, just around $79. We should look at that as a little bit of potential resistance if we can take that out. And I expect that with even a little bit of bullish momentum, we're going to be able to, working into the $80 or low 80 mark is probably not a difficult thing to do if we can take out this resistance zone. So still good move, still good room to work with. I know not a ton if you're not really familiar with how these ETF works. You look at it, say it's only $1, but that can end up being some room on the individual components, at least in my mind. So still 80 is kind of that first real level of resistance I think that we're trying to work towards. I think we have very ample evidence that we should not be going below this swing low. This should be our support zone. If this thing falters, we are going to need to take a step back, in my mind, from a bullish perspective into more neutral or bearish, depending on how it happens, when it happens. I still don't expect it to, but that doesn't mean it won't do that, of course. Over in tech, just a nice little upward move, giving us some room to go still within this area. Hey, we had one day close below the 9 in the last over a month now, so that's something at least. Of course, as you guys know, our all-time high is the swing that we put in on Wednesday, so still very strong. Still have a hard time not being excited about the tech sector. Overall, it's just been a juggernaut, and no reason in my mind to suspect that it has to end here next week. We had really good follow through on probably the if not the, I think probably the, but one of the best signals going in from yesterday into today with that doji at that old breakout point and 9 SMA or 9 EMA. Probably the best. If I was going to buy one of these ETFs this morning, it probably would have been XLP, just with kind of where everything lined up here yesterday. Nice little upward movement. Beautiful, beautiful chart. If we, in my mind, if we look over to the weekly chart, we confirmed that breakout on the weekly. Certainly came off of the highs, but we don't have a lot of resistance until that 59 mark. So at this point in time, we can call, probably call the low here. I'm not quite ready to do that. I'm still going to be just generalizing it at about 57 for the first level of support, but really it could be as low as the 20-day moving average before I would probably start to get scared. I do expect this to be a nice little area for us going into next week. I like that break that we had. I really like the strength behind it. I liked how we were able to catch our footing. Yeah, we gave it all back Wednesday when the market was selling. There's no doubt about that. And that wasn't textbook ideal, but it is what we got. But we had a doji yesterday, really nice follow through. And, I'd like to believe, who knows, but I'd like to believe that this was going to happen even if the market didn't just scream up the charts all day long. We'll never know for sure, but I'd like to think that's how it would have behaved at least. So still think you have to like the staple sector, still think you have to be keeping a neutral rating over in the utility space till we come out of this range between 57, 59. I'll sound like a broken record. Some of you guys have been with me since the beginning of the market recap. Not the first time, won't be the last time that utilities is got to wait for it to come out of this range, right? So they have a tendency to do this. So either cash flow long-term, we're collecting our dividends, but swing trading wise, I think we're staying away. Maybe you could argue to play at the edges, buy if we get back to 57, sell if we get to 59. I'm not really a huge fan of that, especially in the utility sector, but I would understand it, right? Somebody buying, we talked about it just a couple of weeks ago. Somebody buying at 57 makes sense. Wasn't me. Maybe it should have been, but it certainly wasn't me. Healthcare is an interesting one. We had that big breakdown. We came out of that little triangle, a lot of negative pressure within the sector, broke down, really just plummeted, I guess, for lack of a better word. I mean, it was fast, it was furious, it was ugly. And, we all expected a bearish retracement, and it's really kind of worked its way up over the last week and a half or so to potentially at least give us that from a broad perspective. But we spent most of this week kind of hanging between that rising 9. That always is going to concern me. I hope that can be a trick for you guys too when we're looking at our, when trading into things that kind of are in a retracement type of phase. When that thing kind of turns on us and starts acting as the support or resistance catalyst, it's really, in my mind, important to get working back with that thing, right? And so all week long, we kind of talked about need to get below that 9 before, we could get any confirmation. That's not how it went at all. A lot of nice movement here today, good gap on the open. Probably more importantly, on this weekly chart, let's zoom in here. I think this says quit looking at this overall from a bearish retracement perspective. This candlestick, we push through resistance, we push through all of those weekly moving averages. Don't necessarily have to say that this is a strong buy signal, but I do think it's a signal saying, hey, the retracement that you might have been looking for, starting last week or even a week and a half ago, those things have just performed better. They really have started to break resistance, and I think you have to be a little more careful as far as, I don't think you can just look to sell healthcare and have it drop, like we were able to do when it first broke out of that ascending triangle. I guess we still have some challenges short term. I don't think this is a great area overall to look to buy. It was kind of a snapback rally after that selling, which always is a little bit uncomfortable for me, at least. And when I have areas that have pulled back or have recently broke out, I don't expect I'm going to be super stoked really one way or another looking at stocks in the healthcare sector next week. A pullback could be interesting if we start to see that. I mean, we have to look at this with at least a little more bullishness in our eyes, though. I think not necessarily. I could completely understand if someone says, "But I'm not buying this." I would get that. still have the 200. We've got that 50 that might be crossing below that, giving us one of those sell signals. It's right there. There's still lots of overhead that we're going to have to contend with. We get through those moving averages. We've got that $91 marker. This is going to be a tough area in my mind to trade short term, but I do think it's time to be a little less bearish on it. Overall, for the most part, at least from what I was seeing, I don't know what you guys were seeing, but for the most part, I wasn't seeing a lot of things show signals to get into the downside during the course of this retracement. And so it's not like a lot of them faked me into the trade, and now I'm hitting my stop loss and saying woulda, coulda, shoulda. So I do appreciate it not really having a lot of triggering going on because it easily could have been the other way, for me at least. Really, discretionary sector, probably to no one here's surprise. We all know how strong this has been. That doji right at that breakout point was a pretty solid little signal. All we really needed was a market that wasn't selling today, I think, to have some upward movement. Now we gapped on the open and didn't run as much as some of the other areas, but that was a pretty good sized gap on the open, back above everything. These are, of course, our highs right here. So again, a little bit of a break of this resistance should be a continuation signal for us if we can get that next week. A nice little confirmation of that 118 as our support level. We thought we could use it as kind of that first line in the sand. With this upward movement off of that, I feel like we can really start to base a lot of our decisions based around that, at least short-term decisions, that this 118 should hold for us. Break below that might be a show of weakness, but as long as we're above that, I think we can still be fairly confident as bulls within the discretionary sector. Real estate, finally, it's been an interesting week for real estate, right? 2 days in a row, finally actually able to close above that little short-term resistance that's caused us a lot of problems. I would imagine at this point in time, I've not done anything or really been looking to do anything with real estate these last little while. That first pullback was just too violent, and fell through the 50, and we talked a lot about that. But I'm just me. I think if you're probably interested in the REITs, the real estate sector, you're probably in right now. You probably have been looking to work into it, whether it was when it broke out on the intraday, when it pulled back here, when it actually came down and started to show some upward movement. We're back above our moving averages. We don't have a lot of resistance, although we probably best keep an eye on these highs from the last couple of days, because they really did, for whatever reason, they really were a big deal on Wednesday and Thursday. So we got some room till we get there, and I don't expect them to be a huge deal. But the only thing I know for sure is on Wednesday and Thursday, they were a big deal. So we'll keep an eye on them, but really not a lot of resistance until we get to those highs. Again, it probably looks like more of a position traders area right now if we're trying to trade it than a swing traders zone. And I think that's generally the case. We got a little bit spoiled maybe throughout much of the year before this kind of violent pullback that we saw that, at least for me, scared me off. I wanted a pullback, but it was just too violent. I wanted this. And this one we talked a lot about. This was a good one. This one, even though in hindsight, I could have done a lot of things from the bullish point of view, I was scared off. You guys know that. So I think we're still looking at this from a position point of view. Overall, swing trading wise, we're probably already in it. And if we're not, again, maybe it's just my style of trading. I don't think this generally is a great place to go. And certainly when I compare it to other areas, I guess I feel that even more so here today. But I do think you have to give it a little bit of a kick to the bullish side, just a little bit, be a little bit more bullish this week than we were last week. Now we have created higher lows. Now we have created higher highs. We still have resistance ahead of us. Overall, our trend is intact though. So I'm a little more bullish, but quite honestly, still neutral. That was a long-winded way to say I'm still neutral, I guess. So sorry about that. Sometimes you get talking it through and you just end up going to a weird place. Over in communication services, you had Activision Blizzard not have a great report, but they're not a huge component. I mean, the big ones, as you guys know, Facebook and Google, looking like a pretty nice little pullback on this sector ETF. Nice upward movement today, not anything too dramatic, still above those short-term moving averages. Think we're going to like this space. Now we've got Disney, we've got EA coming out here next week. So there still are some earnings over in this sector. And while the chart is interesting, and I would understand if someone wanted to trade this particular chart, I still shy away from trying to trade this ETF if I'm trying to trade this space. So I know other people are not nearly as worried about it as I am, and that's probably the right way to be looking at it. But I still can't wrap my head around Facebook and EA don't have anything in common in my brain, and I don't think they should be forced to be lumped together. So, but a nice little pullback, nice little follow through off of yesterday's hammer candlestick. So still think we can overall like this space. Got to be careful. Those video game companies, a little questionable, from time to time, at least in my mind. Google, of course, breaking down on its earnings, not a good thing, but we don't really need it working with us. It's really hard when it works against us, right? If Google wants to go sideways or something, no big deal. It's ideal if Google's going up when we're bullish and down when we're bearish, don't get me wrong, but I think we can like this space going into next week as well. I'll still prefer several of the other areas because that's usually what I do. So over in the VIX, down a little bit here today, saw those buyers kind of start to work back into the market. And so to no surprise, the VIX, we were worried on Wednesday for nothing, right? One of those, and we talked about it. A lot of us probably thought the same thing. That Wednesday selling was one of those let's trick people type of candlesticks, right? Versus anything else, I think. I did see some selling over in the dollar. Now we tried to push to the upside here today, weren't able to hold that, but I still think overall we're still looking at the dollar in a pretty good spot going into the weeks that come. The only thing that I don't love is we weren't able to close, this breakout. I wish we could have. I think that would have been a much better signal. Don't think it's done enough to get us off of this break as a bullish signal going into, I'm just going to call it the summer, but for the, immediate future, as long as this trend / breaks holding, I think we are looking at the dollar from a bullish point of view. I think if we would have closed green right here, if this was a green candle instead of a red, I would think that, position wise, something like UUP could have been in play early next week. Still could be, but I think we have to kind of get back above the top of these 2 weekly candles for that confirmation, or at least I know that's what I need to see before I'm getting too excited. But overall, I still think we're looking at this through a bullish lens, just a little bit of choppy. I mean, Forex is what it is. The dollar is what it is. It's maybe sometimes it's better behaved than stock. Sometimes it's worse behaved, especially day to day. But I think we still have enough reason to believe that we are looking to hold this breakout. The very least, I think as long as we're above this low that we put in on this Wednesday hammer, is the line in the sand. But I would argue that the 50-day moving average is probably, as long as we're above that 50, I'm probably looking for that ultimately position type of play on UUP, the ETF for anybody who doesn't know. UUP, wherever you are, UUP. That's how often I've been looking at it lately. UUP is the ETF that's going to track that index. So going to need a little more time, I think, to get the signals, at least that I'm looking for. We had a really nice bounce back day. Of course, the dollar drifting down like that, a lot of times that means one thing. That means the metals rallied up here. Pretty decent movement in gold, even better movement over in silver here today. Still below that 20-day moving average, hanging right at that 9. Really, at this point in time, this to me is our first level of resistance. You guys know I'm not a huge fan of the metals right now, and even less of a fan of gold right now. But this is probably the first level of resistance. Again, I'm going to steal this line because I don't think this line matters anymore. And I think this is the new line. If this floor gives out, that could be a bearish signal. I still think that the stock market is a better place to be trading right now from a swing perspective than the metals market. Intraday, much different ball game, of course, as you guys know, especially those of you who trade the futures on the intraday on gold and silver and whatnot. But I think this is the new support zone that we really need to be looking at, quite honestly, with resistance up here at that 1290. So not a whole lot to see here today in my mind. Really nice bounce back day just below that resistance on the silver. I mean, we really got cooking here on silver today. Hasn't broke resistance. Still not interested in it from a bullish perspective. If it does, I will bet that if I had to bet, I guess I won't literally bet, but if I had to bet, I would bet that this 15 area does hold. But if this does break through, we do have to call it a little bit of a bullish signal. I honestly believe that we're taking out, everything but the 50-day moving average in that scenario. Most importantly, we're breaking resistance in that scenario. And it might be something that could be interesting to a different trader than me. Right now, I still think you're leaving these areas alone. They've just been too choppy, right? When we saw that at first, when things then they broke down, I would have expected, and I think probably most traders would agree, when it first broke, we would have saw a little bit more violent movement to the downside, and all we really saw was a dance. And I think when you go to a weekly chart on both of these metals, it just says leave it alone right now. Here we are over on silver, basically huge tails and always running back to the upside. Now there's a ton of things that can act as resistance for it, but I mean that has been very consistent. Dip and then rally, dip and then rally, dipped more and then rally. It's kind of had that little momentum going on. You look at gold, not quite as dramatic, but the same type of stuff. And so I think we just have to be careful. I think the right thing to do right now is leave the metals market alone personally, but you may not agree with that, and that is okay if you don't. I think silver has we have a pretty good idea of where that first level of resistance is. So if we're looking at that from a bearish or potentially buying perspective, I think that's where we can kind of train our eyes to look at that first zone. A little bit of stalling next week. Maybe there could be a bearish retracement, but I still don't expect I would like it very much. Over in natural gas, a little bit more downward movement, probably enough to start working some of the bears in to natural gas. Go into an hourly chart here. So we really kind of went sideways right after we kind of drifted up. Now we started to see some downward movement. The 200-day moving or 200 hourly moving average can do some weird things on natural gas. So if I'm looking to sell natty gas, I'm probably wanting that 200 to give out. Just that's something I noticed or believed in or whatever you want to call it. It might have done enough though. Again, I'm not interested in trying to trade into this retracement because I'm not so sure that that's what this is. And so, I'm still looking at 250 as holding. That's kind of how I'm looking at natural gas right now. And we'll be feeling that way till we take out these lows down here. But I know other traders out there are looking. We saw some downward movement. That 20 has pushed us down. We closed below the 9. Now we've got the gap potential on the open for Sunday. We'll have to keep an eye on that one. But if we do see a little more downward movement, I would expect it to at least have some downward drift. I'm still concerned about 250, so I'm not interested. But I know other traders, personally, I know other traders who are. And so I would imagine a little bit more downward movement's going to make them feel pretty interesting, pretty interested if they're not already into it. But a close below that 9 to end the week, a little bit of a bearish signal for those traders who were looking at it from a bearish retracement point of view. And of course, lastly, over in crude, nice bounce back day here today. Still think right now we're in the wait and see on crude. I don't think there's a great trading opportunity either way. I'm not so sold that this isn't just a deeper pullback. I'm not brave enough to go buy it, put my neck on the line for it by any means, but I'm not so sold that this isn't just a pullback. Closing above that 9 weekly again, we're still in the upward trend. If we take away kind of the context of that selling that we saw here yesterday, we're probably really liking the way it looks. Now we can't take that away, right? So we're not going to do that. But I think between that weekly 9 EMA, this 200 that acted as support on the intraday yesterday, this rising 50, this breakout at $60 approximately, I think as long as we're above that, for me at least, I'm not going to want to go bearish, right or wrong, for better or worse. I'd like to see, and again, we'll see where it takes us, but I'd like to see it kind of flatten out a little bit next week and then kind of reset for the following week. Right now, I still believe it's 50-50 on a pullback versus a breakdown, even though clearly on the daily chart, we do have a break. So I'm not going to buy on anything like that, but I don't think there's a great signal on this personally right now. And I don't think either way, if you say you're a bull, you say you're a bear, I say, yeah, why are you either one right now? So too many, some red flags. We're below the short-term moving averages. We've made lower highs and most notably lower lows. But on the bullish side, we've got some longer term stuff holding up for us. So when there's that much working on either side, it usually means there's not a trade. at least in my experience. So that's where we find ourselves after a pretty interesting day in the market. There's no doubt buyers definitely came in off of that little doji that built up yesterday. Some of the things I was finding that I was getting ready for the scouting report meeting, the coaches always kick that one off before me because I get to come hang out with you guys, which I'm perfectly happy with. Didn't find a ton in the energy sector. The only energy stock I found that maybe was an opportunity for a bear list early was SU that I thought maybe could work with. Don't love it though, but you know, nice little pullback on CE here. A little more upward movement. It looked a little prettier earlier, and well, it looks beautiful right now, but it looked a little better risk to reward earlier in the day. A lot of things in the consumer goods category. As you would expect with where we kind of are within the consumer goods, you know, breakout type of things like on things like Pepsi, you know, a little bit of a consolidation at the all-time high for a potential breakout. MKC, I think we've had this one up on the Twitter dealing with its all-time high for a potential break. Lulu, kind of a lot like Pepsi, kind of consolidating up at the top, actually had a little bit of a pullback here today, but I'm looking at it more as a break. So some interesting things over there. Financials, I kind of like the ETF, you know, but there are some nice things. Aon, a nice upward movement here. The Discovery, Visa, MasterCard all look fairly interesting, kind of taking out some recent highs. Goldman Sachs, probably one of my favorites for next week from a bullish point of view. This close above the 200, a little be something interesting there. I also thought Lazarus was kind of, or third was kind of interesting, had a gap on earnings, kind of pulled back into its moving averages and kind of did a little bit of a dance here. Only issue we have is that falling 200 already has acted as resistance. So that would be my first target, I guess, if I were going to do anything in that regard. Not a lot in healthcare. The only have a few bearish setups that I'll keep an eye on, but don't really love. Not a ton of things, but again, part of it's because of earnings. You know, LMT probably my favorite one in the industrial sector. Again, gap up on earnings, consolidation, looking for an extended move if we can break to the upside. Lots in the discretionary sector too, right? Amazon, BBY, another breakout type of a candidate, just kind of dancing at resistance after a little bit of a pop. Burlington had a big jump on its earnings, kind of pulled back into its 9. So there's lots of interesting things out there. The railroad's starting to look interesting again. You have CSX just broke out here today, that same type of a pattern. I'm keeping an eye on Kohl's, although I don't love it by any means, but I am keeping an eye on it. We have continued to hold this trend line, as weird as and wonky as it's been. Yeah, I think you have to get some upward movement, Majid, on Goldman. If nothing else, where are you, Goldman? If nothing else, I think we need to take out today's high before an entry is established. And we could even argue with as close as it is. Let's go into just go to a 4-hour chart, see if we can zoom this down. Basically, I want to kind of see it break out, basically. So you could argue the actual high that we saw on that gap, but I also think you could easily argue the high above today. It's not going to cost a lot more to go with the high from I guess that would have been the 12th of April, but it will cost a little bit more. That doesn't really concern me because of how we weren't there very long, you know, kind of hit it in the open and then gave it up immediately. So for me, confirmation would need to be above today's high on anything that looks like Goldman Sachs included. So that's where we are. Still at some bearish plays too. You know, you have W that's kind of just hanging around a support zone. Not really done enough one way or another, but kind of established a little bit of a floor here. And forgive me, you know how bad I am at drawing live lines, but a little bit of a, you know, gap down here yesterday, clear floor that's developed off of a gap. So, you know, I don't really necessarily think they'll hit, you know, they'll break the support next week, but you know, it's harder to find bearish trade setups in a bullish market like this, right? And you always have some around. You still have UPS. That was from the reports, I believe it was in the reports last week. I can't remember stock or option. Didn't actually get to the entry here in my mind, at least this week. Actually, a little bit of a retracement. RHI that broke yesterday is now kind of testing that old support zone. So again, are these things ready to go on Monday morning? I don't necessarily believe that, but did find some bearish plays floating around out there. Who else was interesting? I think car was an interesting one, kind of just hanging out, nice move up. And this is what I saw a lot, because of the pullback we got one day, right? So things like McDonald's from yesterday, I want McDonald's or I'm in McDonald's, but it's hard to want to jump into McDonald's now because we had such positive movement off of that, candle that formed yesterday. So I'm finding a lot more things that look like car than look like McDonald's did yesterday, just with the movement of the overall here today. Still some fun things in technology as well. Probably the most interesting one is Adobe, gap up, pullback. This was a resistance zone, so it tested that breakout point. So a little bit of everything this week. No utilities. As long as utilities are in that sideways range, I'm not even bothering to look at them, to be quite honest with you. So a little bit of everything. I'm excited to go see what the coaches have been up to in the scouting report meeting, see which ones they like, which ones they found to go over as well. So ladies and gentlemen, that is going to do the market recap for today and for the week. But as always, thank you so much for your time. It's a lot of fun doing this with you guys. I appreciate you hanging out with me, talking stock, going through that daily routine. I get a lot out of it. I hope you do too. I know I get a lot out of it. So selfishly, thank you for your time. We, of course, will pick back up same time and channel here on Monday. We'll get you those scouting reports and that newsletter here on Saturday afternoon or so you can get ready to rock and roll tomorrow or Sunday, probably Sunday, right? It's going to be a warm weekend. Let's enjoy it. And we got the Cinco, well, I don't know, we got Cinco de Mayo on Sunday. This is going to be a tough one. We're going to stay up late on Friday or on Saturday getting it done. So, of course, if you are new around here, you know the drill. Be sure to subscribe to the channel and hit that notification bell and join us over on Twitter at Tackle Trading. You can find me at Frank Martin23 on Twitter as well. So I will look forward to seeing you guys over there. I'll look forward to seeing you guys here next week. Halftime report here in the market recap. Who knows where else, right? You never know where we're going to meet, but we end up meeting one way or another. So thank you so much, guys. Of course, if you enjoyed the market recap, it is helpful and appreciated if you give it a thumbs up. So thank you for that. Thank you, Patricia. Thank you, Whitney. Linda, as always, you guys, it's my pleasure. Thank you so much. You guys have a fantastic weekend. Enjoy the warmer weather. Hopefully you're getting a little warmer weather. It's a little warmer out in Utah today than it has been. It was a cold week, at least for this time of year. It's a little warmer. We're going to get a nice weekend, it looks like. So, of course, spend some time doing the things you love with the people you love, but be ready to rock and roll on Monday morning. We'll be here with you as always. So get out of here, guys. You guys have a great weekend. Have fun. Be ready to go on Monday morning, and I will see you Monday afternoon. Bye, everybody. Have a great weekend.